Barry, thank you so much for taking the time out of the event to talk to us over at PropertyRadar.
My pleasure.
Seriously, really appreciate it. I'm going to start it off with something simple. In your experience, how should loan officers be looking at lead generation? Where's kind of the low-hanging fruit in this market?
Well, I think that you first have to start with your pipeline, especially right now, because we've had 3 years of elevated rates.
Yep.
So all of those transactions are viable for refinances. We've also had appreciation. So there's cash out refinances, and there's also equity buildup that can eliminate MI. So if you think about those 3 areas, right? So the cash out refinance portion, people are at a level where we're seeing debt has escalated to records on credit cards. People are having a tough time with their car loans. So I think that's low hanging fruit.
Yeah.
And just general refinances that can make rate and term difference. Even if you don't have the MI savings, there's enough juice in there right now. In fact, ICE came out with data that says that at 6 1/8 or lower, there are about 5 million opportunities to refinance, save people 0.75%, 720 FICO with an 80 LTV or lower. So those are home runs, I think. But where you got to start is look through your pipeline the last 3 years and set what I call a strike rate. Hey, Mr. and Mrs. Client, if it hits what level, how much you want to save? You want to save $150, $250, $350 a month? What's the number you want? And I want your commitment that if it hits that, we got this.
Yeah.
So that's the low hanging fruit. But I think it's going to be a great year because I think demand has come down because of affordability, because of rate. And, the media gets it wrong. The media says, well, rates have come down. We're not seeing application. It takes freaking time.
Yes.
What do you think? The rate drops and then the person says, okay, here's the contract and a mortgage. So what you have to think about is, okay, so the rate came down a little bit. First of all, gain awareness. Then, okay, maybe I'll start looking, then, hey, I like this home after I've looked at 10 or 20. Let me put in an offer. Then I got to negotiate. Is the offer accepted? This takes time. And then maybe before I fill out a mortgage app, let's get through review process. Let me do an inspection so I don't throw the money away on a mortgage app. So it could take 30 days of sustainably rates at lower levels. We're starting to get there. I think mortgage apps start to pick up.
Oh, absolutely. Absolutely. Barry, if I'm a loan officer, you mentioned a lot of hidden opportunities. So if you could point to one, where does that hidden opportunity lie in this market?
It all really stems from your expertise. Every relationship, everyone is dependent on trust.
Okay.
I don't care if it's a love relationship, a family relationship. Trust is everything. Trust is magic. Lack of trust gums everything up. When there is trust, it makes everything smooth, right? Because you know that you can depend on each other. How do we gain the trust from a client?
Yeah.
So there's 2 really important ways. One is with vulnerability. Now, you and I could do an interview on that for an hour on vulnerability, but, putting pride and ego aside, and it takes a lot of guts to do those things. But being vulnerable, I think, is a big step towards that. But the other, that's much easier, but you just got to do the work, is expertise. If you have market expertise, you understand your local real estate market, where it's going, not where it's been, where it's going and why. What are the drivers that will create an opportunity of wealth creation in real estate? Where are interest rates headed? Why does it pay to buy now if I think that rates are coming down? These are the things that if you can master and be scripted and overcome objections, that's the lowest hanging fruit. That's the opportunity. That's where you beat your competition. That's where you're not worried about AI eating your business. These are the things you have to do.
Yeah, absolutely. Barry, in your eyes, where do you see rates going in the next 1 to 2 years?
Well, 1 to 2 years is hard,
Okay.
but I could tell you that I think within the next 6 months, we're going to get to 5 3/4, 5 7/8. I think it's very realistic. And that's just not a number I'm throwing out. It's a lot of science behind that. So we're going to get 2 rate cuts this year from the Fed. We're also going to get more next year because the labor market is much weaker than they think. Also, inflation is grossly overstated. It will come down. Those should help rates. You've got a bank deregulation deal coming, which our Treasury Secretary thinks it's worth about 30 basis points.
Yep.
Because then banks could buy treasuries. You also have the Fed just announced that they're ending the runoff soon of their balance sheet. That reinvestment in treasuries will help. The
Yeah.
Genius Act will cause stablecoin to be backed by treasuries that are short-term treasuries. That'll absorb some of the debt. All of these things point to lower interest rates. So they're all working in our favor. If we were to assume that those things start to happen, and the 10-year treasury just modestly drops on a technical level to get to 380 from 4%, it's not that big of a deal, maybe 360. Mortgage spreads have come in a lot. The historical range is 1.6 to 2%. We're at 2.25, which was exactly where we predicted them last year for them to be.
Yes.
So we see that maybe come down to within that normal range. Then we could just do math. And you can say, okay, let's say 360 to 380, let's say 370 on the 10-year. Now let's add 2%, maybe 180 for a mortgage spread. You start to see 30-year fixed rates, 5.5, 5.75. So it's not like you take a number, you pull it out of your rear end. And say, oh, I think it's no. You try and understand what the drivers are. So I think that's realistic.
Yeah, absolutely. So we're heading for that, right? If I'm a loan officer, there's literally hundreds of thousands of loan officers in the United States. How can
175,000 right now.
right? So almost
We have the best data on that, by the way.
yeah.
And that's as of October 15th. The qualification is those are loan officers that did one transaction closed in the past 4 months. So that's what we consider an active loan officer.
Okay, so 200,000 active,
175.
right under 200K active loan officers in the United States. How can I differentiate on that first touch as a loan officer? Whether it's a text, email, direct mail, how can I differentiate?
It's your knowledge of the market. It's your knowledge of the market. And
Expertise.
it's your expertise. I mean, look, you asked me questions. I responded in knowledge on the marketplace,
Yes.
right? Every originator should be able to speak about it the way I did. And if you do, I promise you, your realtors will want you to attend every meeting that they have with their customer, because if you understand the real estate market, you can show the opportunity to a client. You're the realtor's best friend. For a client to speak to someone who's that knowledgeable, they'll make allowances that if you're not the best rate by a little bit, they'll be fine with it, because they're going to figure out, what am I going to miss if I don't do business with you?
Yep. If you had to point loan officers towards one lead gen channel in this market, what do you think?
The opportunity is in your own book of business. That's the best. That's the best that you could do.
Don't let retail eat your lunch. Work that book.
That is the warmest, absolute, easiest way. That's the easiest in the door. You're already their friend.
Thank you so much for your time. Enjoy Fuse. Appreciate you a lot.